You apply for a mortgage, or a car, or even just a new phone contract, and you get rejected. No explanation, just a letter or a red X on a screen, and you're left wondering, why? The truth is, most people walking around have no idea how their credit score actually works. They think it's random. They think it's luck. It isn't. It's a system. And once you understand the system, you can build it deliberately, step by step.
Before anything else, the boring admin step nobody wants to do, but it matters more than people realize. Get yourself on the electoral roll. It sounds unrelated to money entirely, but lenders use it to confirm you are who you say you are and where you actually live. Skip this step and you can get rejected before a lender even looks at your finances. If you've never had any credit at all, no phone contracts, no overdraft, nothing, that's actually a problem in itself. Not because you've done anything wrong, but because there's simply no history for anyone to judge you on. No evidence you can be trusted with money. So the starting point for a lot of people isn't a credit card at all. It's small, ordinary things. A mobile contract in your own name. An overdraft on your current account, if your bank offers you one. These small, unglamorous accounts are often the first data points that start building your file. Here's a mistake that quietly damages people without them ever realizing it. Applying for card after card, hoping one says yes. Every full application leaves a mark. Get rejected 5 times in a month, and it doesn't just feel bad. It actually looks bad, like you're desperate for credit and being turned away everywhere. There's a way around this entirely. Eligibility checker tools, the ones built into comparison sites, let you see which cards you're likely to be approved for without leaving any mark on your file at all. It's a soft check, invisible to lenders, and it costs you nothing to look first. So before you apply anywhere, check first. Only apply to the ones you're actually likely to get. And if every single checker comes back empty, nothing, no matches at all, it's usually one of 2 things. Either you're completely new to credit and there's simply no history yet for anyone to assess, or something in your past, a missed payment, a default, a more serious mark, is still sitting on your file. If it's the second one, patience is the only real answer. Most negative marks need somewhere between 12 and 20 months of clean, consistent behavior behind you before doors start reopening. Not because anyone's punishing you forever, but because trust, once broken, takes time to rebuild on paper the same way it does in real life. In the meantime, the highest leverage thing you can do is simple. Never miss another payment on anything, starting today. Every clean month from here adds up. Once you're able to get a credit card, even a basic one, even one with a tiny limit, this is where most people get it wrong. They think spending it a little is safe. They think clearing it immediately looks responsible. Neither is true. Max it out, and it looks like you're financially stressed, like you need the money, not just borrowing it. Leave it untouched, and it looks like you don't actually know how to use credit responsibly. Both work against you. The move that actually works? Spend on it normally. Groceries, petrol, your regular bills. Ordinary life, just paid a different way. Then let a balance actually build up and show on your statement, rather than wiping it out the same day. And here's the part that surprises people the most. Paying it off the moment you spend isn't the gold star move it feels like. Lenders need to see an actual balance appear on your file each month, proof that you're using credit and managing it, not proof that you've avoided using it altogether. The one rule that actually matters: pay the full balance, every time. Never carry it forward and pay interest on it. But when you pay matters more than most people realize. Your statement generates on a fixed day each month, and from that point, you typically get around 25 days to pay before interest kicks in. The instinct is to pay it off straight away, the moment the statement lands. That instinct is wrong. Here's why. Every month, your credit card provider sends a huge block of data to the credit agencies, hundreds of different fields about your account. Several of those fields are about your balance, but not just one balance. Your balance at month end, your balance on your statement date, your balance on some other arbitrary date nobody tells you about.
Different lenders lean on different fields when they build their own decision-making models, and you'll never know which one any given lender actually uses.
So paying it off instantly can backfire. On some of those dates, your balance shows as zero, as if you never used the card at all. The safer move is to let the balance sit for as long as the billing cycle allows and pay it off close to the deadline. Not so close that you risk a late payment, but late enough that most of those field snapshots catch you actually holding a real balance. The safest way to do this without watching a calendar obsessively? Set up a direct debit for the full balance, not the minimum. It comes out automatically on the last possible day, so you never have to worry about a manual payment getting delayed over a weekend or bank holiday and technically landing late. One missed payment can undo months of careful work. One direct debit removes that risk completely. And how much should actually be sitting on there before it's paid off? Nobody wants to see the card sitting untouched near zero. That looks like you don't really use credit. Nobody wants to see it maxed out either. That looks like financial stress. Somewhere in the middle, roughly 30 to 50% of your limit tends to be the sweet spot. If your limit is small, say £250, that might mean spending around £75 to £125 a month on it, then letting that show on your statement before it clears. If your limit is much higher, you don't need to spend more just to hit that range. A lower percentage is still perfectly fine.
If you're just starting out with a small limit, £250, £300, there's a particular trap worth avoiding. It's tempting to spend, clear it fast, then spend again, especially if the card has some kind of reward attached. Resist that. Rapid spend and clear cycles don't help your file the way people assume. The better approach, spend a sensible chunk. Again, that 30 to 50% range. Let the statement generate with that balance sitting on it. Let your direct debit clear it in full, and only then spend on the card again before the next statement. One clean cycle at a time.
Myth 1. Closing old cards helps your score. It doesn't. An old account in good standing is one of the most valuable things on your file. It shows history and length of relationship. Closing it can actually shorten your history and hurt you. Myth 2. Checking your own credit report damages your score. It doesn't. Checking yourself is a soft look, invisible to lenders, harmless to your file. You should be checking it regularly, not avoiding it. Myth 3. You need to carry a balance and pay interest to build credit. You don't. The people who profit from that myth are the ones charging the interest. You can build excellent credit while paying your balance off in full every single time and never handing over a penny in interest.
This isn't a one-month fix. Realistically, you're looking at 12 to 18 months of consistent, boring, repeated behavior before you start qualifying for meaningfully better products. And ignore the score you see on the free apps, Experian, Equifax, whatever number is quoted at you. Lenders barely look at that number. What they actually look at is your behavior over time. Whether you pay on time, whether you manage your balances sensibly, whether you're predictable. Predictable is what gets you approved.
There's no shortcut here. No trick, no hack, no one weird trick your bank doesn't want you to know. Just the same simple, slightly boring behavior, repeated every month for long enough that it becomes undeniable. That's how you build a credit score. Not overnight, but for good. If this helped, hit subscribe and drop a like. It genuinely helps the channel grow. See you in the next one.